chip-making giant Nvidia broke the $3 trillion valuation mark.
Nvidia, go back there in the AI trade with the Milius head of technology research, Ben Reitzes.
Nvidia's value has soared to a staggering $3 trillion, driven by a 262% jump in data center revenue, which now dominates their earnings. Even their gaming sector has seen an 18% increase, underscoring Nvidia's remarkable success. But the excitement doesn't end there. Everyone is speculating about what's next. Despite this, Nvidia faces relentless competition and rapid technological changes that could alter the landscape at any moment. What if Oracle's upcoming financial moves today throw a massive curveball? Let's explore how this could turn everything upside down for Nvidia. The billion-dollar battleground, Nvidia versus AMD. But this isn't the most impressive part. Nvidia has reached a market capitalization of $3 trillion after its latest earnings report, which showed significant revenue increases.
Nvidia has reported a quarterly revenue of $26.0 billion. Yes, you heard that right. $26 billion in just one quarter, marking an increase of 18% from the previous quarter and an explosive 262% from the same period last year. But that's not all.
Data center revenues shot up by 262%, making up 86% of total revenue, while gaming revenue grew by 18%. These numbers highlight Nvidia's strong performance and the optimistic view held by analysts and investors. But the challenges aren't over yet.
The real highlight here is the data center revenue, which alone accounted for $22.6 billion. This segment grew by 23% from the last quarter, and hold on to your seats, a jaw-dropping 427% year-over-year. This growth is primarily driven by the surging demand for generative AI training and inference on the Hopper platform.
Nvidia continues to face intense competition and rapid changes in the tech industry. As they push forward, the company must stay ahead in innovation to maintain their lead. Attention has also turned to Oracle, another major tech company. Robert Canwell suggested keeping an eye on Oracle's financial activities later today. Oracle works with technologies that handle large amounts of data, which is very important for companies like Nvidia. There's talk that a big increase in Oracle's spending could mean good news for the demand for Nvidia's products.
Now, let's talk dividends and stock splits. In a move to make stock ownership more accessible, Nvidia announced a 10-for-1 forward stock split effective June 7, 2024.
Staying updated with market trends is crucial. For those interested in Nvidia and big market movements, following certain Twitter accounts can be very helpful. These accounts provide timely updates and insights into important market events, helping investors and tech enthusiasts stay informed about key market changes and potential investment opportunities.
This strategic decision not only rewards current investors, but also makes Nvidia's stock more attractive to potential investors.
As Nvidia continues to push the boundaries of AI and technology, the market watches closely. The company's strategic decisions, market performance, and the broader economic environment will all play important roles in determining if Nvidia can achieve that ambitious 15% share of the S&P 500.
How is that possible? Their revenue is almost 1-to-1, but AMD's market cap is $200 billion, and Nvidia's market cap is roughly 5 times at $1 trillion.
When we talk about the tech industry, especially companies like AMD and Nvidia, things can change very quickly. Just yesterday, we saw a big jump in some stock prices, which investors eagerly bought.
Is Nvidia completely overvalued? Well, one of the things is investors are really focused on future growth. And we can take a closer look at analyst estimates. They do believe that Nvidia's revenue is expected to grow to $42 billion next year. By the end of this year, at the end of this year, it's expected to grow to $42 billion.
These kinds of changes are important, but they don't usually stop people from investing in these companies, even if AMD's stock is a bit low right now. Why is AMD still down? Some people think it's because AMD isn't just seen as a cheaper option to Nvidia anymore. Nvidia is the leader, especially in the AI market, where it controls about 90% of the sector. This makes it hard for AMD to get the same attention from market experts, who are perhaps too impressed by Nvidia's success to notice AMD's potential. But this isn't the worst part.
By next year, it's expected to grow to 51 billion, and 2 years from now is expected to go through 63 billion. While AMD, while it is experiencing some growth, is not experiencing the same growth rate that Nvidia is expected to see.
Nvidia isn't just about AI. It's also big in the gaming industry. Gaming makes up around 10% of Nvidia's income. People have high hopes for Nvidia because experts and industry talk suggest that the need for high-performance graphics cards, which are important for computer gaming, will keep growing.
And we've actually heard from Nvidia and AMD based on their outlooks. They're completely different, right? Q2 outlook from AMD, they actually expect a 19% year-over-year decrease, while Nvidia, on the other hand, expects a huge boost.
There's also a comeback in the PC market, which could help these companies, especially Nvidia, given their current market share and expected growth in their key areas. AMD's struggle for expert backing could reshape the tech market, forcing them to rethink strategies, navigating AMD's uncertain future. This puts AMD in a difficult position. Not getting enough support from experts can be a problem in a market that depends on visibility and investor confidence.
Like GPT-4, which require massive computational power, Microsoft has integrated AI into its cloud platform, offering AI services to businesses worldwide and even into the consumer PCs with the 365 AI copilots.
While Nvidia moves ahead with its innovations and market strategy, AMD might need to rethink its plans or come up with new ideas to regain its place and show that it's still an important player in this competitive tech field. As we move into the second half of the year and beyond, there is a great chance for growth in the gaming industry, which could significantly increase revenue.
Google is leveraging AI across its services from search to self-driving cars through Waymo. Meta, formerly known as Facebook, is using AI to enhance social media experience and develop the metaverse. Tesla is pushing the boundaries of autonomous driving with its AI-powered vehicles.
This area is becoming more competitive, especially with companies like AMD improving their performance. Both AMD and Intel are major players in this field, and their growing presence presents a real challenge.
Adobe is revolutionizing creative software with AI features that simplify and enhance content creation. In healthcare, companies are using AI for drug discovery, personalized medicine, and improving patient outcomes.
But this isn't the only hurdle. The Chinese market presents its own challenges. Expectations for the next generation of AI chips are very high, especially for companies like Nvidia. These high expectations bring both opportunities and a lot of pressure to deliver. Despite these challenges, Nvidia's data center segment has shown impressive growth, increasing by over 200% year-over-year in recent quarters.
So a quick summary of key factors driving demand. Increased AI adoption. The widespread adoption of AI across industries, including healthcare, finance, and automotive, has driven the need for more powerful and efficient AI chips.
This is especially impressive given that supply remains tight. The high demand for Nvidia's H100 chips shows this well. They are selling so fast that production can barely keep up. Looking ahead, Nvidia is preparing to launch their new Blackwell chips, which has many investors excited. Everyone is eagerly waiting to see how these new chips will perform financially, as it could be another big milestone for Nvidia.
This is a solution that will actually solve that problem. I have videos on this and I'll leave a link to it in the description below, but I truly recommend that you reserve this because this could be used up to 10 trillion parameters, and it's going to be able to handle various sorts of AI training and real-time LM inference
in a very competitive tech market. But this isn't the whole story. The mix of competition, market challenges, and new product launches creates an exciting and dynamic future for Nvidia.
Now, this GPU is absolutely insane, and these key 6 groundbreaking technologies that work together to enable the AI training as well as the real-time inference for the Blackwell GPU is going to be making it so much more advanced.
But that's not the most interesting part. Mark Lepakis, who recently joined Evercore from another firm, has made some big predictions about Nvidia. He believes Nvidia could make up 10 to 15% of the S&P 500 index. Lippis points out that in every new era of computing, the leading companies usually take up a bigger share of the market index. This highlights the huge potential for Nvidia's stock in the near future.
We know that firstly, it's the world's most powerful chip, meaning that this GPU is able to be utilized as an advanced manufacturing process, and it's tailored by Nvidia.
This is a strong vote of confidence for Nvidia, showing it could be a major player with a big impact on market trends. Yet, there's more to consider. As Nvidia continues to grow and possibly change its industry, it might face new challenges and opportunities. This constant evolution is what makes investing in such companies both exciting and risky.
This basically allows you to combine the power of two GPUs into a single chip, and this is a design which is achieving optimal performance and scalability. Secondly, you have the generative AI engine, which is the feature that employs the custom tensor core technologies.
So keeping an eye on how Nvidia performs in the coming months will be crucial for investors. The busy world of technology stocks, Nvidia has seen amazing growth, with its stock value going up by over 200% in the last year. According to CNBC, this big jump has increased Nvidia's share to 6.6% in the main stock index. But Nvidia isn't alone at the top. Microsoft and Apple are right behind, holding 7% and 6.4% of the index respectively. Nvidia's growth in AI and gaming raises questions about their next moves. Nvidia's bold AI gamble. Despite the tough competition, experts are still positive about Nvidia's future. Lippis, a well-known analyst, tells clients to buy more Nvidia shares, expecting even more growth in its market share. This belief comes from the idea that Nvidia's stock is currently worth more than its price suggests. Evercore also sees Nvidia as a strong buy. Some investors might find this hard to believe, but it's key to look at Nvidia's overall strategy.
And accounted for as much as a quarter of Nvidia's data center revenue. However, we should keep in mind that it's unclear which GPUs Nvidia will supply to its partners in the Middle East, and the value of the deal also remains undisclosed.
Years ago, Nvidia made a big change. Instead of just making general tech stuff, they started focusing more on games. This was a smart move because it really helped them make a lot more money. From the early 2000s to 2009, they started earning a lot more from games, almost 4 times as much. Each year they were making about 10% more money than the year before. But Nvidia didn't stop there. After doing well in games, they started focusing on artificial intelligence, which is all about making computers that can think and learn like humans. This is a huge area and is expected to be worth a lot of money, over $1.8 trillion by 2030.
So, this deal might end up being all about the less powerful GPUs, which Nvidia has been trying to get into the Chinese market with. But this deal is still amazing news because of how established Nvidia's new partner is.
Every year, this part of the tech world is growing super fast, by about 36.6%. So, how is Nvidia doing with AI? Well, they're actually doing really well. They control a big part of the market, about 80%, which means they are leading the way in making these smart chips that help computers learn.
Ooredoo will now offer Nvidia's AI GPUs in its data centers located in Qatar, Algeria, Tunisia, Oman, Kuwait, and the Maldives. But what does this mean for Nvidia and Nvidia stock? Let's find out.
Their sales from these AI chips are huge, making billions of dollars. But Nvidia is not the only company making these chips. Other big companies like AMD and Intel are also trying to make good AI chips. AMD is catching up by making new chips that are almost as good as Nvidia's, and they have a lot of memory, which makes them really powerful.
Here, let's talk about whether or not this big technology trade can get any more momentum than it already has.
Yeah, well, look, as you mentioned leading up to this segment, Nvidia was up 38%.
Intel, on the other hand, is known for making other types of chips and is a bit behind in the AI game. All this competition is good because it pushes all the companies to keep getting better. They are all trying to make faster, smarter chips to handle the growing demand for AI, like helping computers recognize pictures or understand human speech better.
This isn't just financial success, it's a clear indicator of a seismic shift in global computing practices. Nvidia is at the forefront, transforming traditional data centers into what they call AI factories.
But this wasn't the most surprising part. Given these predictions, it seems likely that Nvidia will repeat its gaming industry success in AI. The AI market is much bigger and more profitable, which could mean huge gains for Nvidia if it keeps leading in innovation and market share. So, even with some doubts and the usual ups and downs of tech investments, the future looks bright for Nvidia, positioning it to benefit greatly from the growing AI industry.
These aren't just data centers, they're the birthplaces of tomorrow's AI-driven innovations, boosting productivity across nearly every industry. With the Hopper platform leading the charge, Nvidia's data center growth is not just steady, it's accelerating.
An atmosphere of optimism pervaded the financial sector, fueled by the robust performances of the major corporations commonly referred to as the Big Seven. These companies consistently exceeded expectations, surpassing their earnings predictions and fostering a sense of confidence among investors and market analysts alike. Despite some concerns about the high valuations of stocks, a retrospective analysis spanning 6 months, a year, and even 3 years revealed that these stocks were relatively affordable compared to historical standards. This perspective contributed significantly to the prevailing optimism, suggesting that the future held promising prospects for sustained profitability.
This platform is not just appealing to cloud service providers, but has also caught the attention of consumer internet companies and big names in automotive and healthcare. We're talking about a multi-billion-dollar impact across various sectors.
Over the past 3 years, these companies have increased their operating earnings by $150 billion. Their combined cash reserves have grown from $150 billion to $200 billion without adding more debt. With their current free cash flow, they could pay off their debt in a year. This financial stability suggests we are not facing significant risks of large or prolonged drops in stock value. At worst, we might see small corrections of 5 to 10%. But here's the real highlight. Nvidia stock stands out as a great long-term investment. Nvidia is a leader in AI technology, which is growing rapidly. On May 22nd, Nvidia reported excellent first-quarter results. Strong computing sales and rising demand for generative AI led to adjusted earnings of $6.12 per share. This not only beat the average prediction of $5.60 per share, but also marked a huge increase, 461% higher than last year's first-quarter earnings of $1.09 per share. The revenue for the first half of the year also showed this positive trend, indicating solid financial health and promising future prospects. Nvidia's success sets high expectations. Can they stay ahead in the tech race?
So, what's next for Nvidia? For the second quarter of fiscal 2025, the outlook is as promising as ever. We can expect continued innovation and perhaps even more record-breaking numbers. This journey with Nvidia is turning into a thrilling ride of technological prowess and strategic mastery.
The silent surge of Silicon Valley titans. Last year, Nvidia had a great financial performance. Their revenue jumped to $26.4 billion, much higher than the predicted $24.59 billion. This was a huge 262% increase from the previous year.
The data that you're trying to store. This is incredibly important for knowledge augmentation of the large language models to avoid hallucination.
Their adjusted gross margin also improved a lot, rising by 13.8 points to reach 78.4%, up from 64.6% the year before. The biggest success for Nvidia was in their data center segment. Revenue in this area soared by 427% from the previous year, reaching $22.6 billion. This now makes up 86% of Nvidia's total revenue.
The second is deep learning recommender systems. This is how we get news and music and all the text that you see on your devices. Recommender system is the engine of the digital economy. This is probably the single most valuable piece of software that any of the companies in the world runs. And the last one is large language model inference.
Looking ahead, Nvidia is optimistic about the next quarter, expecting revenues around $28 billion, which is also above previous predictions. But here's the twist. The forecast for adjusted gross margins next quarter is slightly lower at 75.5%, compared to the 77% expected 3 months ago. Still, Nvidia's performance is strong, especially compared to other chip makers.
So let's watch, for the first time ever, MI300X running Falcon on a single GPU accelerator. All right, let's start. We have to give the model a prompt. So we are here in San Francisco. Let's say, write a poem about San Francisco.
For example, AMD and Intel have gross profit margins of 50.6% and 41.5%, respectively. This shows Nvidia is still leading in profitability and market strength.
Here we go, the poem's coming. You can see it's responding in real time. I'm not a great poet, I don't know about you guys. The city of dreams that always keeps you yearning for more. I would say that poem's pretty good, huh?
Nvidia's financial success shows how well they plan and execute their strategies, making their stock appealing to investors. Their ability to stay on top in the fast-changing tech sector highlights their operational excellence and innovative edge. But this wasn't the most impressive part. Their consistent outperformance of earnings forecasts keeps them ahead in a competitive market. This week, the financial markets are a bit quieter. The Dow, the S&P 500, and the Nasdaq have all seen small drops, each falling by about 0.1% to 0.2%.
We make it possible for customers to build and run multi-trillion parameter large language models faster, at massive scale, and more securely than anywhere else. Together, we continue to innovate to make AWS the best place to run Nvidia GPUs in the cloud.
Today, we're joined by Keith Fitzgerald, who will share his expert insights on a big event in the tech sector, Nvidia's 10-for-1 stock split, which starts today.
AI is driving breakthroughs at an unprecedented pace, leading to new applications, business models, and innovation across industries, said Jensen Huang, founder and CEO of Nvidia.
This is a fascinating part of the business world. Changing the price per share can change how investors think about a stock. Nvidia isn't just changing its stock price, it's growing fast. The company has seen its earnings increase by up to 450% year over year and continues to grow at a rate of 250% to 270%.
Our collaboration with AWS is accelerating new generative AI capabilities and providing customers with unprecedented computing power to push the boundaries of what's possible. Latest innovations from AWS and Nvidia accelerate training of cutting-edge LLMs that can reach beyond 1 trillion parameters.
But this isn't the most exciting part. Nvidia's biggest customers are buying every chip the company makes and are expected to keep doing so for a long time. The company is also always innovating and improving, according to insiders Blackwell and Rubin. This constant focus on growth and innovation is why investors should stay confident in Nvidia. The easier access to stock and the company's strong performance are setting up a great period of growth in Nvidia's value. It's an exciting time for both new and current investors to think about their positions in this dynamic company. Nvidia's new AI innovations could redefine the industry in the coming years.
AWS will offer the Nvidia Blackwell platform, featuring GB200 NVL72, with 72 Blackwell GPUs and 36 Grace CPUs interconnected by 5th-generation Nvidia NVLink.
The Rubin architecture exposed. AI is growing fast, with demand always higher than supply.
Marking a 21% increase from the last quarter and a jaw-dropping 629% from last year. And for the non-GAAP earnings, we're looking at $6.12 per share, up 19% from the previous quarter and up 461% year over year. Yes, you heard that right.
Nvidia's CEO, Jensen Huang, mentioned in a recent earnings call that generative AI is now being used in many areas like consumer internet companies, enterprise AI, automotive, and healthcare. This spread creates big opportunities in billion-dollar markets. But this isn't the biggest news.
Now you might be wondering what's fueling this monumental growth. Well, it's all about AI. Nvidia is at the forefront of the next industrial revolution, transforming traditional data centers into AI factories.
At the Computex event in Taiwan, Huang introduced Nvidia's newest AI architecture called Rubin, which will start shipping in 2026. This news came just 3 months after revealing the Blackwell platform. Blackwell is designed for high-performance AI and scientific computing, following the Hopper platform.
This shift is not just a technological upgrade, it's a paradigm shift creating a new commodity: artificial intelligence. This AI boom is causing a surge in demand for Nvidia's Hopper platform, used extensively for generative AI training and inference.
Hopper, launched less than a year ago, is optimized for AI tasks and is now in full production, with plans to boost production in the third quarter. Even so, Hopper continues to do well in the market.
And it's not just the tech giants getting in on the action. We're talking consumer internet companies, enterprises, even automotive and healthcare sectors. Basically, AI is becoming ubiquitous, and Nvidia is leading the charge.
With these new technologies, Nvidia not only strengthens its position in the AI field, but also sets the stage for future growth and innovation. Their strategic releases of advanced technology keep up with the fast-growing and changing global AI market.
They buy this stock when it was trading between $12 and $14 with a price target of $25. You'll be surprised to learn that within 2 weeks, the stock surged by 50%, trading at around $20. Our members enjoyed a mouth-watering 50% return on their investment in just 2 weeks.
Jensen recently shared that Nvidia plans to release new chips every year instead of every 2 years. This change is important for Nvidia to stay on top in the AI chip market, where they currently hold between 70% to 95% of the market, according to Mizuho.
First on our list is the creative powerhouse Adobe, ticker symbol ADBE. While a household name in design software, Adobe is also a major player in the AI revolution.
Even though the competition is getting tougher with other big tech companies like AMD and Intel offering their latest AI chips at lower prices, Nvidia's early and strong start in the AI field gives them a big advantage. This head start means their competitors are often several months behind, or even more.
Despite its immense potential, Adobe's stock price has experienced a roller coaster ride, recently declining from a high of $638 to around $436. While it has recovered somewhat to its current level of $530, we believe that the market is still undervaluing Adobe's long-term prospects in the AI landscape.
Nvidia's fast growth is clear, as it recently became the second most valuable company in the world, with a market value of $3 trillion. This is an incredible jump from just under $100 billion in less than 5 years. Nvidia's strong position in the AI market is expected to keep growing. But here's the surprising part. Despite some experts worrying about possible drops, there's still a strong push to keep investing in Nvidia's stock. The company's smart moves and the growth of the AI industry suggest that Nvidia's power and success will only increase in the future. What if Nvidia's dominance in AI is just a bubble waiting to burst? Like, comment, and subscribe for more.